And a lot of people who come into this space, I find, have shiny object syndrome, right? And, it's like, oh, I'm going to do short-term rentals because that's attractive, and Airbnbs, or someone wants to do land banking, or someone wants to do land development. And you can make money in all those spaces, but only if you do it well, right? And, there's a quote that I really like that I heard again recently, and it's that, I'd rather go an inch wide and a mile deep than a mile wide and an inch deep. Right? You don't want to necessarily be, at least we don't want to be a sort of a jack of all trades, master of none, right? So you want to choose a lane.
Welcome to the Adriana Ostapenko podcast. I'm here with Insiyah and Sib. We've actually known each other for, I'd say, like at least a year to a year and a bit. We met at a multifamily networking company we're part of together, and have had multiple conversations. It's been so fun to watch your journey. You guys always come off to me as such like a friendly and yet like really ambitious and smart couple. So I'm very excited to have these conversations, learn how your journey in real estate has been, and then how others can get involved with you, as well as what can we tell others that would help them in their own journey. So welcome to the podcast.
Thank you. We're excited to be here.
Thank you so much, Adriana. You actually come off very talented, multi-talented yourself. So, and it's been great since we connected and getting to meet with you again as we kind of connect at more conferences.
Yeah, exactly. Last conference we were at together, we actually got to know each other a bit more, which was nice. Just like your background story and where you came from. So it was a quite nice experience to have that opportunity. Tell me a little bit about who you guys are and what brought you to real estate, and what's your main focus right now?
So what brought us to real estate? I think, for me, I used to be a high school teacher, and I loved what I did. And real estate really, or at least the full-on business side of it, wasn't in my path as far as I saw. Mind you, I had my real estate license for many years, so it was kind of running there in the background. And then, Sib, for him, it's been more prominent. And he was like, read this book. And everyone knows this book, Rich Dad, Poor Dad. So when I read that book, I think something clicked for me in my mind and sort of opened me up to the world of business and the incredible possibilities that exist in that space. And then again, Sib, he's like, we got to go to this workshop. And, of course, it was Alfonso speaking at that workshop, and you know him very well. And, he's so inspirational, and that really sort of lit the fire and excitement for me to move into the real estate space. So that's sort of my journey in. So, do you want to tell how you what inspired you to get into it?
Yeah, sure. So, I was working a corporate job for many, many years, like a couple of decades in the finance field. We were trading our time for money, and we were paying a lot of taxes. We tried stock option trading. We tried buying single-family properties, a couple of single-family properties. But we knew something had to change. With stocks and options, it was doing really well for a while, and then the market corrects and everything goes down. It doesn't matter what stock you're in. And so we wanted financial freedom, we wanted location freedom and time freedom. And I've always had a passion for real estate, so we started educating and training ourselves. And then we started multifamily investing, and which is how we got here, and the rest is history.
Tell me a little bit about what direction it took you when you started investing into multifamily.
So when we started investing in multifamily, we focused on value add. And we focused on three main provinces. So we started off in Ontario, and then we moved into New Brunswick. And that market, a large part of our portfolio is in New Brunswick, especially because the laws there are more landlord friendly. And we've also got property in Alberta. So those are the three main provinces that we focus on right now. Most of it is value add. On a couple of projects, we're exploring land development as well, because there is opportunity there, and it looks pretty promising. So we're moving in that direction too.
Where's your land development?
One is in Edmonton, and one is here in Ontario in Peterborough.
Nice. Looking back at like the different provinces that you're investing in, is there one that you like more than the others?
Yeah, I think that's a good question. I think in Ontario, our properties have done really well because when we buy the properties, the rents are pretty low, and then there's quite a bit of room to lift the property in terms of the valuation. In like New Brunswick, we have properties in Moncton, Fredericton, St. John, And those markets are more landlord friendly. So if someone doesn't pay you rent, it doesn't take a whole year like in Ontario to get the tenant out of the property. And then in terms of Edmonton, we find that we rezoned a property. It took us about 8 to 10 months to rezone the property in total from end to end. The process is very easy there compared to in Ontario. So for land development, we do definitely like Edmonton. The cost per square foot to build is cheaper there as well.
Nice. So ultimately different provinces for different things.
Yeah, exactly.
Could you share a particularly challenging situation that you've faced in your real estate career so far?
So I think it's probably one that's common to many people. So what happened in 2008, everything crashed. And at that time, we had real estate investments predominantly in single family, and they were invested internationally, so nothing locally in Canada. So, and that did hit us pretty hard when the market tanked. And what we realized was with those types of investments, we were banking on a market upswing, right? And that is really speculative. And so after that moment, it was a super memorable teaching, like a lesson learned. And we decided to really educate ourselves in all the different sort of types of projects you can take on in real estate and what are the pros and cons of each. And from that, we decided to settle on multifamily just because you have more control on the value of your building, and it helps to reduce the risk when you can do that. So that's the one that we settled on then.
So what countries were you invested in?
We were invested in Dubai. There were multiple projects, some of them pre-construction. Yeah.
I see. And again, the strategy was especially if it's pre-construction, that by the time it's built, it's valued more and you can make like a margin there.
Yeah, exactly.
What do you believe is the most important quality for success in real estate?
I think the most important quality is to build a power team. Like with real estate, it's a bit of a team sport, right? So there's lawyers, accountants, contractors, property managers, realtors, right? So you have to be able to talk to a lot of people, get the information, sort of triangulate the information, turn it into knowledge, and then to take action. So it's really about the people and then taking action based on what you learn.
To add on to that, I think probably because I'm a teacher background, but I think education is a really, really big part of it. It's there's so many components to real estate, whether it's building your network, building your team, and all of that. But I feel like education is sort of the one underlying element that kind of connects everything. Because if you're going to underwrite the deal, you have to be really thorough. You miss a few line items and, you might be shooting yourself in the foot, or, from the financing side of it, it's critical as well, right? And a lot of people move into the space without, the breadth of financial knowledge that would be, really critical in this. And, I think that really helps because Sib comes from a finance background, right? He's a CFA and he's had 20 plus years of corporate finance experience that he brings to this. So that's a huge advantage for both of us. At least we have complementary skill sets, and the education, I think, is a really big part of it.
I so agree with that. I think like there's a education and then learning from experience, because that makes all the difference. Like I learn something new every day. There's just no other way. We think we've thought of everything, and then something new comes up and we're like, oh, okay. I haven't heard this before. Nobody told us. Like we've been talking to this accountant or have worked with this accountant for years, and all of a sudden there's a nuance to something that we've never heard of. Nobody has ever mentioned it to us. We wouldn't have even known to ask. So it's really like experience counts a lot because you're learning every single day. How do you structure your real estate business? Do you bring in investors to invest with you? Like, how do you go about what is your main focus on your business?
So go ahead.
Yeah, so we're bringing in capital partners into the business. So we started buying our deals for ourselves at first, and then now we've sort of gravitated towards bringing in capital partners, helping people make passive income. And so we'll bring in a capital partner to help with the down payment and closing the property, and then we'll sort of try and renovate the property, raise the property value, and then what happens is the capital partner get their money back first, and then we share in the profits of the deal from that point forward.
Is there like some any like active components to your real estate business that you have in place?
So sorry, active components to our business?
Yes.
Yeah, so we're like doing the value add strategy. So we're doing a lot of active renovations on most of the units that we have. So we'll turn the units over, we'll renovate them. Our renovation strategy is more or less an end-to-end renovation, so including new kitchens, bathrooms, flooring, all that stuff. We'll add laundry sometimes in the suites as well. So it's a pretty active strategy until we stabilize the property, and then it's just managing the day-to-day of the property.
What would you say is the key to stabilize the multifamily assets?
I think the key is just looking at the overall asset. Like each building is very specific. Like it needs certain things. Like some buildings need everything, roof, windows, everything. Some buildings only need certain things. So just knowing what to do with which property, I think, is very important. And I think what's also key is finding the right contractors and right property managers to help with the renovations and the tenant strategy.
Yeah, and just to add on to that too, I think it's important to know your market, because what you don't want to do is over renovate, right? Certain markets have a bit of a ceiling. So, I mean, if you're going to spend an extra 10, 15, you might not really see the lift in it. So you have to be sure that you kind of match the renovation with your demographic, your ideal tenant there.
How do you manage like having properties in all these different markets?
A lot of property management teams. But you kind of really search for the right team for what you want to do, right? And once we find that team, we work very closely with them. So part of our job is really managing the managers, and just kind of making sure that they're on top of everything, whether it's, tenant relationships, sending out notices whenever needed, for, let's say, delinquency of rent, or, rent increases, make sure that they come out on time. And managing, if they're working together. Some of the property management teams we work with also have a construction arm. So sometimes they're also active in the renovation side of things. So, we're working with them on many different fronts, and they've been very good relationships. So that's how we get away with, being away at a distance, from the properties.
I love that. I invest out of province as well, and honestly, having the right team on the ground makes all the difference. And then just staying as connected as you possibly can, asking the right questions, collecting the right information and data to make sure everything is going well, makes all the difference. What advice do you have for someone who's just starting in real estate?
So I think, again, it's a comment that you made earlier too, that, you're kind of still learning. And I think that's really important. It's not like you learn once and then stick it on the shelf, right? It's something that you're going to keep doing every day, because the landscape in real estate keeps changing, right? So you do want to be in front of what's going on. But also, if for someone coming in, I would say choose a niche. So most people, because there's so many different things you can do. And a lot of people who come into this space, I find, have shiny object syndrome, right? And, it's like, oh, I'm going to do short-term rentals because that's attractive, and Airbnbs, or someone wants to do land banking, or someone wants to do land development. And you can make money in all those spaces, but only if you do it well, right? And, there's a quote that I really like that I heard again recently. And it's that, I'd rather go an inch wide and a mile deep than a mile wide and an inch deep, right? You don't want to necessarily be, at least we don't want to be a sort of a jack of all trades, master of none, right? So you want to choose a lane and go all in, right? So, I think the last thing would be a mentorship, to have someone who's kind of been in the market, because you can educate yourself, but experience is, you need to live it, unless you can speak with someone who's kind of been in the market much longer, gone through the market cycles, the ups and downs, and then that can just, help you accelerate the growth.
100%.
I'm sorry, go ahead.
I said 100%. Go ahead, Sid.
Yeah, and just to add to that, I think more practically, just spend time looking at properties, like walking the property, speaking to property managers, speaking to the realtors, and then you just spend time analyzing the actual deals. Once you start analyzing deals, looking at the numbers on the property, you get to learn the market, learn the rents, learn the expenses, and then perhaps, if you want a shortcut, you can partner up with somebody else who's actually doing it right now, and you can bring your skills to the table, and you can partner up with somebody who complements your skills potentially.
I love that. Have you guys tried any other strategies outside of multifamily?
No, but we have a couple of short-term rentals as well. We were doing multifamily. We're looking at land development as well. We have a couple of single families that we owned from before we started investing in multifamily. Since we started investing in multifamily, we're focused on multifamily. We think that there's more value there in terms of income to expense ratios because of the economies of scale, call it. But yeah, we have tried a few different. We've actually tried a rent own as well. We partnered up with somebody on a rent own strategy as well. We've done a flip. We're working on a flip as well. So we've done a couple of few different things, but the multifamily is our bread and butter strategy, right?
Yeah, I'm curious because you said like most investors have shiny object syndrome, and I think partially you sort of have to try different things to see what you actually enjoy doing and what strategy fits best with your lifestyle goals. It's very rare to find a real estate investor that hasn't tried multiple strategies. I feel like most people have tried pretty much, everything that you can do. And then they learn, and say, okay, that's a no for me. Myself, the same thing. I've tried quite a few different things. There's some things that I haven't tried and I still don't feel like trying, and I've never really gravitated towards it. And there's some things that I haven't really got into it too much, but I know that that's where I want to head to. So, and then there's things that I've tried and I was like, oh, okay, no, this is not for me. No, thank you. Like, I can't do this. So, I feel like there's a bit of there's not much you can do other than try some things and see what works and how do you feel. Unless you're able to have such self-awareness already coming into real estate. I do think the mentors help when you're looking at where do I want to go? What kind of what are my goals here? What lifestyle do I want to experience? And who is living a similar lifestyle? What strategies are they working on? I also find that something that I've learned to ask people as I'm thinking of something that I'd like to try is, what does your day-to-day look like? People don't always understand. It sounds wonderful to have hundreds and hundreds of units, but do you really want the day-to-day that person has that owns 100? Can you really see yourself day-to-day doing the work that's required to maintain and operate? So development was one of those things for me. I am doing a development. I'm very excited. But as I've been going through the process, I realized that the day-to-day work of a developer is not something that I can see myself doing in the long term. I can participate in different ways, but it is very engineering conversations, and I'm not an engineer.
It's interesting, right? When you're going so many different fields, you kind of learn the ins and outs. And you're right, it's like any job, looking at it from the outside in is very different from actually living it day to day, right? So you're right, that is the best way to experience everything and learn what you like, and then you can kind of sort of end up settling in what fits you best, right? Yeah.
Yeah, for sure. It's awesome because it's a journey, and you don't know what you don't know. You will eventually find out.
That's true.
But at first, you just don't know what to expect. What would you say? What do you think is the biggest misconception people have about investing in real estate?
I think that a lot of people think it's just really easy money, right? Like you just, you get this great product and, you just kind of go with it, and it's just going to cash flow, and, you're going to be, very wealthy doing it. So I think, you really need to know that product inside out, and, when I think of it, it's kind of like imagine you're going on a camping trip. You're not really just going to get in the car, drive out into the wilderness and wing it. You got to plan. So you're going to bring your tent, you're going to check the weather and bring everything in case of inclement weather. you need your food, you need your water, you need your supplies. And so there's a lot that goes into it in order for that journey to be a successful one. So I think same with real estate, like you really need to know it well, and you need a lot of planning for the execution to be as smooth as possible and as successful as possible. So I think that's one of the misconceptions I think there are. Nasib, I don't know if you have any.
Yeah, yeah, sure. I'll add to that as well. I think people think the real estate is a passive, like it's a very passive thing. You just buy the property and you get the income, right? But real estate really takes a lot of time and a lot of people to manage, especially the multifamily properties, or as you scale your portfolio. And then in terms of even finding the right deal, we'll look at 100 deals, we'll analyze maybe 30. We'll offer on 10 and we'll get one deal, right? So even the acquisition process to find the right deal, and you make the money on the buying of the deal. If you buy the right property with the right strategy, that's how you make the money, right? And I think one more thing is, people say, real estate is location, location, location. But I think it's a combination of location, which is very important, but also the right strategy for the right property. So, and then like running the numbers on the deal is critical, not just the 1 or 2 year numbers, but the 5, 10 year numbers, and seeing exactly how the property is going to perform, what the exit strategy is, just looking at all that holistically.
Yeah, I think there's some key points there. One is the amount of work that it takes. I think we hear sentences like most billionaires were made in real estate. But like you're looking ahead with people that have been in real estate for 30 years and have put all this work in. Nobody's looking at the process of getting there, because it's not easy, as we know. It's a lot of work. There's a lot of risk. It's a lot of putting yourself out there, doing the best that you can and figuring it out and pivoting and learning and scaling. There's just so much that goes into it. And yes, it can be successful just like any other business if you start the right business and you stick with it and you're willing to learn and you're willing to grow and scale. Eventually it feels like you've become an overnight success, but there's nothing overnight about it. You'll be literally putting the daily work for years to get to the results that you're looking for. And then it's, like you said, the passive thing. I think a lot of real estate, and including myself, and you mentioned the book earlier, Rich Dad, Poor Dad. I think that book helps with that misconception slightly in how he phrases, the book itself. It gets a lot of people interested in real estate, but they come with this misconception that, hey, I'm going to buy some properties, I'm going to be cash flowing, and I'm good. It's a passive income. There's nothing passive about real estate unless you are partnering with real estate companies that, take on the work. You still have to do your due diligence. You still have to make sure you're comfortable with the project. You still have to, make sure that the company is fulfilling what they committed to doing. So you still have your responsibility as an investor. That's never going to change. However, it is, in that case, it's way more passive for you. But other than that, if you're an active investor, if you're a landlord, there's nothing passive about it. It's very active. You're doing a lot of different things every day. It doesn't end. It's not like it gets to a point where it's all good now, like with properties that we own and still own. There's always the new tenant to be, dealt with, and there's always the new maintenance request, and there's always a turnover. So it doesn't change. So very true. And I think that's the message, really, come into real estate knowing that it's an active business, that you need to look at that as an active business. Go learn, go, join an educational program, go hire a mentor or coach that can teach you the lay of the land and the biggest things that you need to set up to be successful in real estate. And then you got to do the work and stay in it long enough for you to see the results.
Yeah,
definitely.
Yeah, no, that's great advice. I think, and you have to plan for sort of the different paths your project can take, because we all have an exit strategy. We need multiple, and we need to be able to sort of plan, maybe you want to cash out in 2 years, but what if you need to hold for 4 or 5 or 10, right? So understanding that how you're going to navigate a changing market, it's important too, because there's always projections, but then life takes its own course anyway. So it doesn't always line up. So you kind of have to be prepared for, the different paths that might occur in the project. Yeah.
That's so true. One of the biggest things that I learned this year, or became way more relevant this year for me than previous years, was the responsibility of like talking about the exit strategy, always. And not only because when we're first looking at a deal, we are thinking of the exit strategy. That's how we kind of come up with our numbers and projections. But how do you make sure that the exit strategy still works as the market is shifting, as the project is shifting, as needs change? Like, we can't really only talk about the exit strategy once. We really should be talking about it as part of an ongoing conversation, as in renovations, as the market is shifting, as interests are shifting. Hey, how are we doing on that exit strategy? Is there something else we need to be looking into here? In our case, we got caught on a CMHC reinforcement of a 2-year rule.
Mm-hmm.
And we, like, honestly, like, I don't even know. Like, I don't know how we could have predicted that. I certainly didn't. And it felt like, okay, what do we do now? And I thought, okay, this is interesting. I feel like we should have been talking about the exit strategy way more often instead of waiting for the project to finish and see. I mean, we had an exit strategy, from the beginning, which was this, and then it got changed on us. And now what? We didn't overly have a plan B, but we had to come up with one pretty quickly here on what would we do next, and how do we best fulfill the commitments that we made to the project. So definitely that's one thing that's important, is what is that exit strategy, and talk about it more often. The other thing was implementing very intentional monthly financial meetings. I don't think we did that as intentional before, but this is kind of how you keep a pulse on things. Like, hey, we're meeting very intentionally to go over our finances. How are we doing in the construction? We had ongoing meetings about all the different pieces of the business and how they're performing, but we really didn't have in place to put it all together and meet intentionally, at least once a month to review finances and those exit strategies that we've now implemented. So it's a habit that makes a big difference in how things are going.
That's great advice as well, because when you meet on a regular basis to discuss the finances, you get to really look at things with a fine-tooth comb, right? And go through everything. And then it's easier to find the gaps and deal with them when you can respond faster to the situation. Before, you've kind of left it for a long time, you go back and then things aren't lining up for some reason, right? And then you can kind of see, okay, well, maybe this property manager isn't managing it well enough. The high expenses are too high, or there's been too much vacancy here, right? And then you can make changes earlier on to, obviously get the best result for your investor.
That's right. And that was really the learning. Like, we had a bookkeeper in place. We were filing it, like, we thought it was looked after in some way, shape, or form. And it is to some extent, but not with the eyes that we needed to be looking at it that consistently. Because by the time you catch something, it could be months and months down the road. And you don't catch it early enough. So small changes like that. And again, coming from experience, like, running into situation, you're like, oh, what can I do better here? What can I implement to make it better moving forward?
Yeah. Like what's important is having systems and processes in place, like whether it's for property management or for accounting or for the financials. We've over the past couple of years, we've spent a lot of time working on these systems and processes, which really helps, I think. And putting in the weekly meetings where we need weekly meetings, and the monthly meetings where we need the monthly meetings, and then the reporting in place. I think those are all critical things that which you're alluding to.
Yeah, exactly. And we had all those pieces in place, except that we weren't meeting to review what was being done that regularly. And I think that's where one of the learnings from last year was like, okay, yes, the bookkeeper is doing their thing and they're checking things and they're reporting and sending reports every month, but are we really being that intentional to sit through it and review it ourselves and get the information that we need from there and ask the right questions? So really helpful. I do usually end with one question. I'll actually give you both a chance to answer. this question. The question is, if you had the world's attention for 30 seconds, what message would you share with everyone?
Okay, I can start. So I would say, it's a famous quote where people say, when was the best time to invest in real estate? And it would be like, 20 years ago. The next best time is today, right? So we know so many people that are invested, in stocks or, just different things. And a lot of it's very volatile. But real estate is such an incredible vehicle if you use it well to really build wealth for your family, for your friends. So I just, people who don't know about real estate investing, I would really encourage them to look into it and, dip their feet in.
I love it. Siv?
Yeah, I'd say like life is short. Like we have a lot of friends that are working on with full-time jobs, and they're very busy people. Like life is short, and if you can have time freedom through investing and taking action, I think take action, take some risk in life, a little bit of risk, calculate a risk, and just get out there and speak to people. Like life is very short, so you got to prioritize what you want to do, and whether it's investing for your location freedom or time freedom, or whether it's something else, but sort of prioritize your time, right?
I love it. That's so true. I mean, at the end of the day, that's why we do real estate. So we can have, build wealth, have legacy, have time freedom. Thank you so much both for being here. How can people get involved with you guys?
So, they can visit us at our website at pragmaproperties.com, or they can reach out to us on LinkedIn, Instagram, Facebook. We're on all the different platforms, so feel free to reach out anyway.
Amazing. Thank you so much. It was such a pleasure to have you both. I'm sure I'll be seeing you around soon in an event. Always good to see you both. Have a wonderful rest of your day. Make sure to subscribe and follow and share this episode for really great tips on how everyday people like us can start real estate empires. Thank you so much for being here.
You're awesome, Adriana. Thank you so much for having us.
Thanks, Adriana. Great seeing you always.